All right, we're back after a year of being away from Forex and Chills. And we used to have 200, 300 people here on a Friday night. And we would chart and study the market together from 9 o'clock till 2 and 3 o'clock in the morning sometimes, guys. It was crazy. How many of you remember the old days of Forex and Chill? Let's pull it up on YouTube. How many of you here have been on Forex and Chill before? Drop a 1 in the chat. If you've ever been on the previous Forex and Chills, drop a 1 in the chat. So I see a lot of the old family is on here. Let's go over to my channel. Guys, if you've been here since the beginning, you know we have come a long way. We started out with trading just straight market structure. Happy Friday, happy Friday. All of us getting here on Friday nights together. It wasn't just me charting, it was everybody charting together, everybody learning together. And we came from nothing to becoming 6 and 7 figure traders. There's people who started out here who had never marked up a chart before. Now they're making 6 figures. Now they're making 7 figures. And it's been like a 3-year journey. So it's good to see a lot of the old crew on here. How many of you, it's your first time being on Friday Night Forex and Chill? Because we did this solid for like a year and a half. We did not miss Friday nights at all. I mean, guys, when I say we were on here until the roosters crowed, we actually had somebody who's always every Friday night on here from Africa, and you could hear his roosters crowing in the morning in Africa because we would stay on here all night long. So if you want to follow me on Forex and Chill on YouTube, this is my page. You can like and subscribe. You can go to videos, and you can see how my trading career has evolved. And not only was it just me, it was like people on the team. We were all trading together. We were learning together. Then I would bring on guest traders. And, you know, we've taught stuff like Rincos. We've taught market structure. We've taught smart money concepts. We've had educators on here from different platforms. We've taught almost everything on here, guys. And we did it together. And to look back and see the people who stuck it out is just huge to me. To see the people who came in, they stuck it out, they're still here, to see how their lives has changed. So we went from, oh my God, I hate to even look at my old charts. Let's just see what one looks like versus what I'm doing now. So
0.01 or 0.10.
Okay, that's Mario's back in the day. We were all just using all these patterns, trend lines, and now we've evolved to coming up, catching, you know, 10,000 pips on US 30, 20,000 pips on US 30. This week we had 12,800 pips on US 30.
Up. I might have taken it.
Wow, it's just great looking back, seeing how everything has changed, how we have evolved. So tonight we're going to go real old school with it. We're going to look at market structure, because one thing I learned after trading for 2 years, I was taught wrong. And as some of you were on the call last night, a lot of you saw that you were taught wrong as well. And it's crazy, because when I first came into Forex, it was literally the blind leading the blind. And a lot of people stayed blind, but some of us, we stuck it out. We searched for the answers. We searched for the knowledge. We searched for the education, and we never gave up. And here we are today. So I'm going to completely clean out a chart. How many of you would consider yourself like a beginner trader? Drop a 1 in the chat. Drop a 1. Thank you, Arian. So if you're a beginner to trading, like you've been trading like 1 month, 2 months, 3 months, you know, or you're not at that point where you're able to make withdrawals in the market, you're not pulling any money from the market yet, okay? Drop some 1s. All right, if you feel like you're an intermediate, things are starting to make sense. You know, you're getting to that point where you're at least break even or making a little bit of money every week, drop a 2 in the chat. So my intermediate traders, drop a 2 in the chat. And I know I've seen some people in the last few months make their first withdrawals, and it's just amazing, because I remember when they were blowing accounts. All right, so if you're consistently drawing profits, but you're not maybe a 6-figure trader yet, but you see yourself getting there, drop a 3 in the chat. So if you're intermediate, you're starting to be consistent. And guys, excuse me, the babies are here. You're going to hear them yelling in the background. Their dad's military and everything going on. You know, he's over at Fort Bragg. It's crazy time for them right now. So that's good. I see traders of all levels. If you've already consistently hit your 6 figures, this is what you do for a living full-time, drop some fours in the chat. If you're trading full-time, it's your primary income. Oh, thank your uncle for his service. That's where my son-in-law is right now. Full-time traders, drop a 4 in the chat. If there's anybody full-time, drop a 4 in the chat. So Ruben's full-time, on his way to 6. Way to go. All right, so I see we have traders of all levels, and that's a good thing, because regardless of how good you get, how much money you make, you should always remain a student to the market. Okay. So, and one thing I've learned along my journey, that even when I was technically on the charts, I was one of the best traders out there. Every signal I dropped played out. Every chart I dropped almost played out. I rarely missed, and I was just dropping signals all the time, and everybody was making money, but I wasn't trading. Psychologically and mentally, I was not there yet as a trader. How many of you feel like you got the skill set, but some things just aren't adding up? You know, drop a 7 if you feel like you understand what's going on in the market, but things just ain't clicking. It's like you can see the plays happening out. You're not pulling the trigger. You're pulling it too soon. You're pulling it too late. You're holding on to bad trades. So we're going to cover all that tonight. We're going to look at the market, look at how to mark up a chart. We're going to talk about trading psychology and what it's going to take for you to become a consistent trader, because trust me, I have been that 1, that 2, that 3, that 4, and that 7. And we have one of my best friends in life. We call him the money coach. He's going to come on and talk about risk management at the end. So I'm going to start from the beginning. We're going to go from every level of trader out there, and we're going to take it from 0 to 60 in like 2 hours tonight. So one thing I can tell you guys, just a little preview on risk management. Some of you think that you have to be the best trader in the world to be a 6- and 7-figure trader. That is the biggest lie you can ever tell yourself, because what I did is I started researching people who were pulling money consistently from the market, because that's what I wanted to do. And most of them were hitting 30 to 50% accuracy. Now you're sitting there asking yourself, how in the heck is somebody only winning 30 to 50% of their trades, but they're trading full time? They're getting funded with FTMO or some of these other prop firms out there. How in the world is somebody losing 60% or more of their trades, but they're a 6-figure trader? How many of you're like, that just really doesn't make sense? Drop a 1 in the chat. If you sit and think about it and you're like, oh my God, they lose over half their trades, but they're making 6 figures. That don't make sense. Drop a 1 if you feel like that. It just feels like it doesn't make sense. But what if I tell you that's the formula that got me funded? That's the formula that made me a 6-figure trader. I stopped worrying about how many trades I won, and I started focusing on how much I risk per trade. Okay. And then how much I won when I did win, because my trades that hit, it's nothing for me to win a 5 reward. It's nothing for me to win a 10 reward. Last week, I had a trade that I had a 23R. So now let's just say that I took 10 trades this week. If I lost 5 of them, which is 50% at 1% each, I've lost 5% of my accounts. But since I win at least 3 to 1, let's be moderate. The other 5 that I won 15% this week. Subtract the 10, I'm up 10% for the week. Even though I lost half my trades, I am now a funded trader. Does that make sense? Drop a 9. Yeah, y'all know what Miss Gigi says. If it ain't 100 pips, I don't want it. Drop a 9 if that makes sense to you. That's the level we're going to take you to tonight, because trading isn't just about being able to mark up a chart. I remember my whole first year when I got serious, all I did was chart 24 hours a day. But nobody taught me about risk management. Nobody taught me about trade management. Nobody taught me about the psychology of being a successful trader. So what did I do? I started spending money on learning how to chart and become a better charter. I'm like, I must be missing something, because I guess I need to chart better. So I plugged into ICT. Did it make me a better trader? Yes, it did. I took WWA's course. Did it make me a better trader? Yes, it did. It made me a better trader on the charts, but I still wasn't making the money that I should have been making, because I would see people, I'm like, oh my God, look at that, excuse me, raggedy ass chart. And they made more money than me this week. They can't even chart. All my trades are hitting. How are they making more money than me? It made no sense. And then I started seeing people talk about the psychology of a trader, the risk management of a trader. And I started plugging into those things. And I said, you know what? It's time to stop studying how to chart. There's nothing wrong with the way that I chart. I'm charting better than 90% of the traders that I see out there. So I started following traders who had the mindset, who had the results. And I'm like, what makes that trader different from me? And one of the people I started following, and some of his teammates and his students on here tonight, is Q Banks. Now, if you want somebody who is tapped into the mindset of what it takes to kick ass in the market, then you definitely need to follow Q Banks. I love the way he approaches the market. I love the mindset that he has. I followed his story, and I'm like, you know what? I know how to chart, but I can't think like this guy. I can't approach the market like this guy. So I signed up for his course so I could start thinking like him. And it really took me to the next level. Now, I'm telling you guys, grow where you are planted. No matter where you are, you have the resources you need to become a successful trader. It's up to you to plug into those resources. It's up to you to start charting. It's up to you to work on your mindset, your risk management, and your trade management. So since we have traders of all levels here, we're going to look at a chart the way that I see a chart, and we're going to open up the floor for questions, comments, suggestions, the way we always did it on Forex and Chill. It was a group effort. So last night, and I'm not picking on anybody, but we covered GBP USD. How many of you were on the call last night when we covered GBP USD? Anybody that was on that call last night? Okay, I see some people that were on the call. All right. I'm going to allow you guys to unmute. And if somebody would tell me, the person who was asking about GBP USD, can you tell me why that person didn't understand what the market was doing? What was the one mistake they were making as to why they were lost in the market and didn't know what to expect next? Anybody who either want to type it out or you can unmute. Oh yeah, you made money on that.
It didn't go from the monthly, weekly. They were looking from the daily.
Yeah, so they were looking at the lower time frame. And so they didn't understand what the higher time frame was doing. And I can tell you now, if you don't do what we call top-down analysis, you are going to be lost when it comes to the market. So Randy says he took that trade from last night. He's made money and he's still in it. That's proper trade management right there. And that's something else we covered last night. So the person last night was saying that, you know, they were looking at this trade, but they didn't know if they expected it to sell, if they expected it to continue to buy. And the thing was, they were looking at the 4 hour. They hadn't taken a look at the monthly, the weekly. They were looking at the lower time frame. Now, when you start looking at the market, you have to understand what every single time frame is doing. If you don't, you're going to be lost. And so I consider it, you know, I spent a lot of time over in Afghanistan, and we heard airplanes and surveillance 24 hours a day, 7 days a week, nonstop. You always heard planes, kilos, everything going up. So what they were doing surveillance from above ground. And whenever you do top-down analysis and you go to the higher time frames, you're doing like an aerial view of the market. So you can see everything that's going on, and you can see a clear view of where the market is and where the market intends to go. Does that make sense to everybody? All right, please stay muted unless you have a question. That way I won't have to turn the mics off. Does that make sense to everybody? If you are a higher time frame, it's like you're on an airplane and you're flying over land, and you can see all the nooks and crannies. You can see all the highways. You can see how to get from point A to point B, right? But now, once you just say you see a helicopter flying over a forest, they can see everything. But when people get off of that helicopter and now they start doing surveillance, boots on ground, what do they see? They see all the trees, all the branches, all the bushes, all the weeds. They can no longer see what's going on around their perimeter. Now they're blindsided by what's going on and they don't know what to expect. So when you're looking at your monthly, so let's take a look at GBP USD on the monthly. Here on the 4-hour, you don't know where it could go next. You don't know how much money is left on the downside. You don't know how much money is left on the upside, because when you look left over here, you have a very limited view. All right. We don't want to limit our view when we're working with $6.6 trillion a day. So if I go to my monthly, now I got my aerial view. I can see everything this market is doing. So we see here on the monthly, we had a big impulsive move. Then we had the sideways consolidation, a continuation, and sideways consolidation. So this is all on the monthly. This is all bearish momentum, really, because if you look at continuation patterns, and for those of you who are new traders and you need to train your eyes, you can come over here to Google and type in Forex continuation patterns. All right, and you can click on images. So this is how I trained my eyes. I started focusing on what is the market doing, okay? Clear all the annotations. Don't mark unless you have to. There will be a couple of times I will ask everybody to mark. So if you look, like here is a bullish. Excuse me, sir?
It's called Forex Market.
You look up Forex continuation patterns. That means the market is going to continue in the direction that it's going. So an impulse tells you the direction the market wants to go. When the market impulses down, you need to see a corrective pattern that confirms it's going to continue to the downside. And so the market did a big impulse to the downside. We got that sideways consolidation. And then it gave us another big move to the downside and sideways consolidation again. Now, after you get your Forex continuation patterns, then you can start looking at your Forex reversal patterns. And you're going to do the same thing. You're going to look at the images. You'll see different illustrations here, some that are common to you guys. All right. And start learning those, start training your eyes to those, because when you see the market doing certain things, it's telling you exactly what's coming next. So we have a big bull, a big bear run here, a big drop. This is an impulsive move, okay? Anything that is a straight drop means the market is trying to sell off. Something that's an aggressive straight move up means it's trying to buy up. But what really matters is what happens next, okay? Because we got this sideways consolidation that was sort of leaning to the upside, that is a bearish flag, and that lets us know from up here, we could look for a continuation of this sell side. So just think, if you had known where you were in the market when this sold off, this ended up dropping over 5,000 pips, okay? So we identify not only our trend, but what kind of pattern is it making after that trend? Is it telling us that trend is going to continue? Is it telling us that trend is going to reverse? So let's look at another pattern that we see here on the monthly. And this is why you can mark up a chart in 30 seconds, but these are the kind of mental notes that you need to be making to yourself as you're assessing this market. When this continued down, now you got a double bottom. Before all of this happened, when you saw this double bottom, you could have come on a lower time frame and got a breakout, a break in structure, and caught this and rode this all the way up because you saw the pattern that the market was giving you. So here on the monthly, that was 2,943 pips, okay? So when you learn to identify these things with your eyes, then you start reading the language of the market. It's just like when you start writing when you're in kindergarten, when you get to first grade, second grade, third grade, fifth grade, your writing has become more advanced. Your reading has become more advanced. So the more that you chart, the more advanced your reading and your writing is going to become in Forex. I sit here sometimes for hours at a day and watch every single candle on the 1 minute and try to forecast what the market is going to do next. I call it forward testing. A lot of people spend a lot of their time back testing. And that's fine and dandy, but you want to really get some precision in the market. Start forward testing and see how right you are at calling what happens next in the market. So going back to the monthly, we see what is happening from an aerial view, because your monthly is like taking the book. This is the whole book, and your monthly is the book cover, and it's just giving you a whole synopsis of everything that's going on inside the book. So then we go down to our weekly. Our weekly is like our chapters. Our daily is like paragraphs. Our 4 hours is like sentences. And we get down to like our 1 hour and lower time frames. Now you're getting into punctuation, commas, and things like that. So that's why we have to read this whole market like it's a book, because we want to understand it from beginning to end. So when we get to the next chapter, when we get to the next paragraph, we know exactly what to expect. If this is making sense, drop a 1 in the chat, okay? All right, so now I'm gonna cover just a few more things and then we'll mark this chart up from scratch. Okay, for those of you who are new, the market goes impulse, correction, continuation. Impulse, correction, continuation. So the market is either gonna impulse up and give you a corrective or continuation pattern and then continue up, or it's gonna impulse down, give you a corrective pattern, and then continue down. Now, I don't just look at this anymore. I do look at things like liquidity, smart money, institutional candles, or the ICT order blocks, things like that. But you still need to be able to see market structure. So when we're on a clear uptrend, the market goes impulse, correction, continuation. At this point, you had a low, a high, a higher low. It does that again. It makes a higher high, a higher low. It does it again, makes a higher high, a higher low. This means that the market is in an uptrend. And if you're an inexperienced trader or a new trader and you don't know how to trade counter trend, then you should only be trading pro trend. Pro trend means you only go with the trend of your daily, okay? If you want to stay in tune with the market, don't trade against the daily until you become experienced enough to do that, okay? So now how do I know when this market has reversed? Does anybody know? And we covered this last night if you were on here. How will I know when this market has reversed and has decided to start selling? What do I need the market to do?
When you get a lower low?
Yes, a lower low or a break of structure. Okay.
The tackle, shake it up.
All right, please mute.
Dallas, got a timeout. No score.
Host, could you mute everybody, please? All right. So here we had another high. All right, guys, we're recording so we can watch this later. Please stay muted unless you have a question. So we have another high, a higher low. If the market comes now, it makes either equal high, a lower high, or maybe a slightly higher high. But now when it takes out this low and makes a lower low, that is when we have a true reversal in the market, okay? So now we're gonna get a retest and we're gonna look to get our entry here, and we expect the market to now make a high, a low, a lower high, a lower low, and keep doing the same thing back down until we get a reversal again, or it could consolidate for a while and then go lower, or it could consolidate for a while and then go up. But this is how we know when the market has switched momentum or switched trends. And we're going to break down GBP USD now, because we're going to follow that market structure from the monthly all the way down to like the 4 hour or 1 hour and see why we got a move in the market last night that we were anticipating. Because there's so many things you're going to learn about the market. Like, it only moves really well at certain times of the day and things like that. But that all comes with experience. So we're going to look on our monthly and we're going to find what we call a trading range. Okay. A trading range is right here. This is where the market has been ranging. all the way since 2017, GBP USD has been ranging in this pattern right here. Okay, so that's the only thing I need on the monthly. Where is my market ranging? Well, this was the last high that it created. And down here, this wick was the last low it created. Now you might ask, well, why are you counting that wick? And I'm glad you asked yourself that question in your mind that I'm going to answer, because inside that wick, I have 1,004 pips. How many of you would like to catch a move for 1,004 pips? I mean, some of you, that might not be a lot of pips, but to me, that's a pretty good move in the market. So I am not going to discount my wick, especially on a higher time frame, because on the lower time frame, that is all price action. That is all candles on the 1 hour and the 5 minute, the 15 minute. That's all candles that I can trade. So now on my monthly, I have identified my trading range. Why is this a range? Because until it breaks above this, this is my most recent high. Until it breaks below this, this is my most recent low. So it's ranging, and it could range for months, years. We don't know. Until it breaks this, or until it breaks this, we are in a range, okay? So on my weekly, I'm going to go down and I'm going to identify the trend again, all right? This is in what kind of trend? What kind of trend are we in, guys?
A bullish
trend.
Yep, a bullish trend or an uptrend. And if you want to, you can mark that off and, you know, put on here that that's your weekly. All right, we said the market moves, impulse, correction, continuation, correction, continuation. What are we getting right now on the weekly? What kind of move is that? It's not an, yep, it's a flag, an impulse, it's a flag or a correction. People will call it different things, but at the end of the day, it's the same thing. So the market is correcting and it is consolidating, which means on the weekly, you know, it looks choppy because now we have a pattern being formed. But is this pattern looking like it's going to sell off, or is looking like it's going to give us another push to the upside? This corrective pattern, does it look like it wants to push up one more time or break to the downside? Yes, it looks like it wants to buy up again. Right, so if you go and look at those continuation patterns, this is a continuation pattern, which means we could get another push up here. You see, we still have plenty of ground between here and here before we get to that real true high. So let's see how many pips that is. Like from here up to here is another 500 pips from where price currently is to get to that most recent high on that monthly time frame that we marked off. Now, here's what's beautiful to let us know that we just had a nice reversal. What kind of candle is this right here?
Engulfing.
Bullish engulfing.
Yes, a bullish engulfing, which means price is trying to go to the upside, and it left what kind of candle behind and when it took off? Yep, that's like it's an order block or an institutional candle. That's where, because the people who control the market, they sell to get a good price before they buy, right? So that's how this candle was created. They sold and ran price higher because they want to buy up, because they want a good price, okay? So it's just like any type of economics. If something were $50 here and it went way up to like $100, the people who control the market want it to come back down to 50% or less. So they want it to get to $75 or less before they open another position to carry it higher. Okay, we're not to the point to talk about order blocks yet. We're going to go through this chart. All right. So does everybody see that they sold the market off aggressively because what did it leave? How do we know that this was an attempt to take money and run the market up? What did it leave behind?
A wick.
A wick. That means it sold off, but then it bought up aggressively for 181 pips. because it left a wick. This wick used to be black. It used to be all candle, but down here, somebody stepped in and bought the market back up, and it formed this bullish engulfing candle. Now, what did this candle, let me zoom in on that. We're going to dissect this thing. What was the purpose of this candle right here with this long wick? Anybody know what the purpose of that candle was?
To show a change of
They
movement.
trying to push it back down.
Okay, what did the second person just say?
I say the sellers tried to gain control again, but it didn't work. It was a fake out.
Okay, kind of, sort of. I think I heard somebody say it though. Okay, if the people who want to buy sell to buy, what do you think happened to all that money they pushed down here to sell the market? When it took off, what do you think happened to them right here? This is a market maker right here in this candle. What do you think happened to the people stuck in this candle?
One, they'll lose their account, they lose money.
They're trapped. No, they don't get stomped out like we do. They control the market. So they drive price lower because they want to get a good price to buy it higher. So they split their money. That's why they're called hedge firms. What does hedge mean?
Going both ways.
Yes, hedging means you buy and sell. But if I'm really buying and selling, where's most of my money at? All right, I put most of my money in the buy. I left a little bit behind. So what did this do? All right, because it came right to it, guys. What do you think the purpose of this was? You can't see it on this time frame, but it's a flag or a corrective pattern because we got that impulse. So what do we need to confirm that the market was going to go up? What confirms that the market is going to continue going that way? Yes, mitigation is what they did. A correction, that continuation pattern. So we had an impulse, a correction, tap into where they were, got them out at break even. So now they can close their hedge and ride the market back up. Does that make sense?
Yes.
All right. So every move is manipulated and every move is on purpose. When they sold the market down, their intentions were to buy it at a lower price, run it up. Their part of their sale got caught. All of their sale didn't get caught because look, it wicked back up. The only part that got caught up was this little black candle. So now they came and retested it. If I move this to right here, if I made money on all of this, you think I'm worried about that one or two little pips I left there? Because I got millions and billions in the market. I'm not trading FTMO. I run the market. I got billions in this thing. Okay, so does everybody understand what just happened on GBP USD and why it happened? See, seeing it with your eyes is one thing, but seeing it in your mind, it completely changes your perception of the market. Because if you're going to trade long term, and if you're going to make money at this long term, you need to understand the psychology behind the market and why the market does what it does. How many of you've had people say, well, just do what I tell you to do, and you do it, but you just don't understand what you're doing it. Then when somebody finally explains to you why you're doing what you're doing, it's like you had that aha moment. So now the next time you see a bullish engulfing that leaves this candle here, what are you going to expect price to do before it continues buying up?
Retest.
Exactly, a retest or a correction or a mitigation. So what do most of us do? We see a bullish engulfing, so we jump in here, we start riding it up, and then what did it do? Came and took us out at break even, and then rode back up again because we're chasing price. We're not patient. We got FOMO, fear of missing out. Oh my God, I missed the trade. It took off without me. And you jump in and it comes back. So you're like, oh my God, it's selling. I want to sell it. It retests this and it goes back up. Now you're like, oh my God, I just don't know how to trade. No, you don't have any patience. Okay. You don't have any patience. But the good thing is if you get and draw down in the right direction, at least when it comes back, it's going to go your way. So you need to at least understand where you are in the market and why the market is doing what it's doing. So GBP on the weekly, and this is why, you know, the young lady was confused last night. She hadn't looked at her weekly. The weekly is telling me that I'm in an uptrend, and at any moment, I can expect this to buy up. What did it do? Okay, now I'm going to show you another trick that some of you probably have never seen. Okay, how many of you trade supply and demand? I got any supply and demand traders in here? There's nothing wrong with being a supply and demand trader. I know people making 7 figures doing that too. Okay, so what kind of zone is this right here? At these 2 candles. In fact, see if I can do it. I'm not good at the supply and demand thing, but if I take this candle here and I run it all the way across, all right, so let's see what happened to the market here. It bought up, right? What happened to the market here? What did it do? It bought up, right? So when the market came here, what do you think supply and demand traders were automatically doing? They were buying up because it bought here. It bought here. My mentor said, when it comes there, it's going to buy again. Okay, so you put a pending order there with like a 30 or 50 pip stop loss, but to make money, I need to take your money. So what did they do? They ran your stop. They took your money. Not only that, you got breakout traders who are sitting here with sell stops that activated their sell stop and came back and took their money. So now they've taken out all the geniuses that were sitting here. Oh, I'm talking about myself too. I used to do this too. So all the geniuses that were sitting here that were taught, you know, by like some people taught me, when it gets here, it's going to buy. When it gets here, it's going to buy. When it gets here, it's going to buy. It stops you out and then it goes your way and you miss the whole freaking trade. Why? Because you didn't wait for confirmation. You didn't wait for confluence. Okay. If you had been patient and let the market do its thing, you wouldn't have got stopped out. So now let's dissect this and see if we had been patient, could we have caught this trade? All right. If we had put a buy stop, we would have went over 100 pips drawdown. So we don't want to do that. And this is on the weekly, guys. So really 100 pips stop loss on a weekly isn't bad. But let's go now on the daily. We have a bullish engulfing that we looked at earlier. And then we have our watch of that bullish engulfing. What happened right here? Came in and retested, right? So what if we had been patient and at least waited on that retest on the daily? Now we could have gotten in with a lot less drawdown, okay? But we still don't trade off the daily. So let's see if we can go deeper into this thing and dissect it a little bit more. We haven't been to our 4 hour yet. Let's see what happened on the 4 hour. On the 4 hour, there was that big wick that took your money. It made an impulse of correction on the lower time frame. We can't see it here. It still looks choppy. We still don't enter out the 4 hour. Let's see what the 1 hour is saying. Well, the 1 hour is a little bit cleaner. We got an impulse correction. This was holding it. Some of you probably had a line there and was like, well, this is holding it up. I'm gonna go ahead and buy. But nah, I'm still not satisfied. I like tight entries. So let's see if I can get, oh, here we go. This is beautiful. The market was selling down. Here we had a minor break of structure, an impulse correction, came back in here, did it again, gave you a second chance, and you could have taken that. Some of you used the Fibonacci. So let's just say you were waiting on that 50 or that 61.8. Let's see what we would have gotten here. Boom, 61.8, you could have bought that, or the 70 and taken that trade. Now you've taken that 100 pip stop loss. Let's see if you got in here and put it below here. It's less than 30 pips. So which makes sense? Buying off that supply and demand zone and having that 100 pip stop loss are coming down to your 15, and now you have it under 30 pips. Okay, that making sense to everybody? So learning to train your eyes for these kind of things is going to make a big difference. Let's see if we could have got anything off the 5 minute. Anything any different? No, not really, because if you had taken the 5 minute, it would have came in and stopped you out and then went your way, because you would have probably had your stop loss under here. And that's why a lot of times when you're moving your stop loss, you just need to move it to slightly above break even or get that tight stop loss and don't move it. Don't risk more than 1%. Okay. And how many pips has it gone up so far? Well, let's find out. Let's see. Clear all the drawings. 15 minute gave the prettiest structure for an entry. So we're just going to pretend that we got in off that 15 minute. Get rid of this, don't need it anymore. Okay. We're going to say we got in long, about right here, and it was giving us all of that sexy price action. Stop loss goes right below the impulse. Give it about 2 or 3 pips for your spread. And let's see what kind of R&R we could have gotten on this. Oh boy. Dang. Did we make some money on this trade or what? Just look at that. So right now, because you know, a lot of you probably would have taken some profits off here and started rejecting, but it was still bullish. You still had an impulse, a correction. Now here's a break of structure on a higher time frame, a retest for it to go higher. But let's just say that we had just taken it up to there, because we know a lot of people get scared. They don't hold the trades. Let's see what our R&R would have been. Just right there, you would have had almost a 10-to-1. That means if I had only risked 1%, and let's say 1% of your account was $100, I made 10% back. I made $1,000 off of a $100 risk. Okay. 10-to-1s are easy when you do a top-down analysis from the higher time frame. So now you've made your FTMO or your funding talent on one trade, and you only risk a little bit of money to do it, 1% of your account to do it. So if you had a $10,000 account and you risk $100, you just made your trade that carried you for the whole month on one trade. That makes sense to everybody?
Yep.
Aaron, you're probably new to fibs, and we'll cover some of that later on. You don't need fibs to get your entries once you start learning like institutional candles, price exhaustion, things like that. But it is a part of Confluence that some people use, or confirmation. So up until this part, does anybody have any questions about any of that?
I had a quick question. If we were to hold that trade for, what is that, an entire month, if we were, and I hate to ask this, but I'm asking anyway, for if we were using it in a, or trading it in a funded account, would that count as one trade over one day, or the 30 days? I don't know if I'm
30
asking the right
days, because
question.
I opened the trade over the weekend, and on mine it showed as the whole weekend as my counting days. And I guess it's going to also depend on the firm. But now there's another thing. Do you guys see that pattern? When I told you guys to look for the continuation patterns, here's another reason you could have been looking to buy it on that daily. You see that? It was an impulse, break of structure, which means the market was no longer selling off. It had a high, low, lower high, lower low, well, lower low, lower high, lower low, broke it, retest, and the market took off. So start looking for storylines on every single time frame to know where you are in the market, what the market is doing. If that market comes back and retest again, I'm gonna snag it from about here for about 623 pips. If you got in it last night, I know some of you did because we talked about it, and you could end up with over 500 pips. All right, so does everybody understand what GBP USD is doing and why at this point? Everybody understand what it is doing and why?
Gigi, I know you haven't turned it over to me, but let me just interject while you right here at this point. All 94 people on this chat, this Zoom, should know that you just got broke down the absolute game. When I tell you what she just said at 10:48, this Zoom started about 10 o'clock. So somewhere about between the first minute of the video to minute 49, she just broke down to you how to be a consistent, profitable trader, minus me breaking down how you figure out the 1%, the risk management, the whole 9 yards from a calculation point. She just broke down the entire game. If I cannot employ you, the 94 people on this Zoom tonight, I'm honored because she told me this is the first one she had in a long time. And I used to be a guest just like you, and I'm a special guest. I just used to come on ForexNChill and listen to other people, and she about to introduce me. But I'm telling you guys, she just broke down the game to you to be billionaires. There is no limit to the amount of money you can have. The wealth, it's not even about that. It's just about being comfortable and being able to do what you want to do. You can tap into whatever level of finance you want just off of what she just broke down to you. I'm telling you, she just broke down the game to you. I couldn't even hold it. If you can, and I'm typing, and she can tell you, I'm texting her while she's teaching y'all. Am I doing that, Gigi?
Yep. Too much sauce given.
Tell them what I just texted you. Tell them the 5 words I just texted you. You just said it.
Patience, confluence, confirmation, risk management, execute.
Structure. And I'm telling you, the 5 words she just said, type those in the chat. Patience, in all caps, patience, confluence, confirmation, risk management, execute, structure. Please type those words in the chat. I'm going to say it again. Patience, confluence, confirmation, risk management, execution, structure. If you can tap into the first hour of what she just taught on this video, this ForexNChill, I'm telling you, you have the absolute power to be as comfortable as you want to be financially. This is amazing. If it was broke down to this, to us, like it was to what she's doing to y'all, we would have been much further than we are right now. But I'm telling y'all, she just gave y'all the blueprint. Y'all know how great Gigi is as a trader. Put some ones in the chat. Put some ones in the chat if you know that Gigi is an amazing trader. This is what she does all day, every day. Everything she's telling you, she's not hiding nothing from you guys. She's giving you the blueprint. And I just want to just reinforce what you're hearing. Go back and replay this video over and over and over again. This video, this ForexNChill on YouTube should reach 1 million streams. You should share this with your family, share this with your friends. You should play this over and over and over again. I cannot tell you how many times Gigi and I watch footage of film of other people's videos that are tutelage that we have paid for to learn what we teaching y'all. Like I'm telling you, you need to watch this exact ForexNChill. It should have the highest rated views that she has ever seen because she has broken down the game to you. Patience, please. What did I just say? Patience. She telling you, you FOMO, you getting in too early. It's going the way you want it to go, but you got in too early. Patience, confluence, higher high, broke structure. That's confluence. When it breaks structure, that's confluence. And what does confluence do? It confirms that there is a change that has happened. Confirmation, add in risk management, which what I'm finna talk about soon, and execute purely on structure. That is the game to wealth. Thank you, Gigi. I'm gonna watch this, and I'm a guest, and I'm still gonna watch this about 7 times to hear everything you just said over and over again. Proceed.
So we're going to mark up one more chart, and then we'll let my man, the money coach, tell you what you're going to do to make sure you're not giving your money back to the market. Because the number one job of a trader is to what? What is the number one job of a Forex trader or an investor? What is your number one job when you walk into this market? To protect your money. To protect your money. Number two is project your money. We're going to make money. So first we're going to smack it up, flip it, rub it down, and then duplicate it, right? So somebody give me a chart you want to look at. What chart you guys want to look at next? We'll break it down and then we'll let the money coach take over and talk about risk management. Somebody said gold and somebody said EU. I already got gold marked up. So
USD.
we see right here that this gave us that impulse correction and that continuation. That you can't beat these patterns. Once you start seeing these patterns, now you just need to focus on finding your levels of liquidity. And we don't have time to go into all that tonight. But what I do is I find the pattern, then I find the money, because the market creates a pattern that is seeking money. The big money steps in and leaves some little money behind, and then the market comes back to take out that money and then continues on their merry way. Because the same people that sold it off bought it up before they sold it off. Okay, you see this candle, they bought it up and then sold it off. So they came and closed it out. Now down here, they sold it off the last time to buy it up. So now what did they do? They just came back to claim the money they left behind. All they're doing is seeking liquidity. The market is like a vampire and the liquidity is like their blood. These candles are seeking liquidity in the market. Once you learn to identify that, then you will understand the reason the market moves the way it does. So let's just go over here. Let me clear this chart. All right. So let's do like we did before, take everything off. What type of trend is your monthly on? On gold, what kind of trend is the monthly on?
An uptrend.
And what kind of pattern did it make?
Correction.
Correct. Too.
Right. So all those big sales have been what? A flag. That was your impulse, and it's just making a flag. Wow. To you people who are not looking at your monthly, if you're getting your asses handed to you, this is why. Because now, like I was sitting back in the chats and watching people, I have no idea what gold is doing. And I'm like, oh, they hadn't looked at their monthly. If they hadn't looked at that continuation pattern, this was like an impulse correction on a daily. What comes after daily? Impulse correction on a weekly. What comes after weekly? Impulse correction on a monthly, because the market is fractal, and what it does on one time frame, it does them on it all. So now, again, if we had these supply and demand traders sitting here and they automatically bought when it came to that zone, what happened? Wigged them out again just to push it back up. How far did they push it back up? Over 1,000 pips. Or is that 10,000? And look what it came to, an institutional candle on your monthly. So if you have been looking at this on your monthly, you would have been anticipating, what is this wick on a lower time frame? We talked about it earlier. What is this wick on a lower time frame? The market sold off, then what produced a wick? Why is there a wick?
To get a better price for buys.
But what caused the wick to happen? What did they have to do to leave a wick behind? There's a long wick.
Buy.
Yes, they had to buy it back up. So this is a monthly. How many weeks are in a monthly candle? Well, we're just in the second week. So if you go to the week, so there was the first week, and here is the second week. So you see, this is that wick. This wick is where they bought it back up. So whenever I go to the monthly and I put my vertical ray, my vertical line through this candle, that means anything that you see now to the right is what it took to form this monthly candle. Okay, we've only had 2 trading weeks so far. And there you go. The first week they sold it down. The second week it started out as a sell. It came and ran that demand zone. and then bought back up. Okay, so let's go to our daily. Now we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, because it takes 5 daily candles to make a weekly. So now you see what happened during this whole month so far. It sold off to buy back up. Let's go to the 4-hour. So we had 10 daily candles. There's 6 4-hour candles. So 10 times 6, there's 60 candles now that have happened on the 4-hour. And this is that wick that everybody was seeing on the 4-hour and didn't understand what price was doing. So let's go down to the 1-hour. Okay, so sometimes you'll have an impulse, correction, continuation, but sometimes you'll have an impulse, reversal. So this is what the market did. It did an impulse to clear out liquidity, run this demand zone, trap the buyers, activate the sellers, and take everybody's money. Now you screwed the buyers, you screwed the sellers. Now you're going to do what you wanted to do all along. Impulse, correction, continuation. That makes sense? For the person who asked for gold, is this making sense? Yes, no? I don't want to lose you. I want you to understand what the market is doing. So we had got on the monthly. Now this is why you've been getting crazy up and down in the market, because the monthly is creating a flag to come back up to that high. All right. So that's what gold is doing. You don't really even have to go any lower than the monthly to understand what it's doing. But since we don't trade off the monthly, let's go down. We had our flag here. Guess what kind of candle we had here? An institutional candle. Okay. First time it hit it, it automatically bought up. Over 20,000 pips. So when it came here again, it's probably going to shoot past that 20,000, come back up here to the top. And if it's going to sell from up here when it retests this institutional candle. All right, so that is what gold is doing. The only way this will continue going up is if it breaks structure, because now, again, looking at it, we have this. It's going to have to break this to get up there. It could get there and come down one more time, because here is another institutional candle under here. And it could just make a bigger flag and then take up. We won't know until we see if it breaks this high and then this high. It could come retest this and then sell back down to there. We don't know yet. We're here to obey by the rules of the market. And if the market tells us it's going to go higher, we continue holding. But if we get here and it gives us a clear rejection pattern, we close those buys and we look for the sell back down to, on our weekly, we have another institutional level here that could definitely get hit. Okay, so that's what gold is doing. It's just making a big monthly flag. So for you people who don't look at the monthly, if you were lost and didn't know what gold was doing, that should bring you some clarity. All right, so I hope this session has helped everybody. Please don't get off, because, okay, TJ, I'll get you in just 1 second. The reason I'm asking you not to get off, guys, is because even when I knew how to do this.
Never buy two again. It just sat there. I had to throw it away.
Hold on, let me mute everybody. Somebody got bit. All right. So even when I knew how to do this, I wasn't making money consistently because I didn't understand proper risk management. Because how many of you have taken 10 trades, you won about 8 of them, and then you come back and 1 or 2 take every bit of that money away? You won 8 out of 10 trades, flipped your account, then came and let 2 little trades take back every bit of your money. I'm raising my hand. Y'all might as well raise yours too. If you haven't done that, God bless you. You're a genius, because I know I've been there. And it's all what we're raised to be winners. Okay. Everything in life, people have told you, you need to be the best. You need to win. You don't need to lose. So looking in the mirror every day and convincing yourself that you should never lose is one of the worst things you can do when it comes to trading, because in trading, I never learned to make money until I learned to lose money. And what do I mean by lose money? I started using stop losses, and when I saw that trade going against me, my ass closed it, okay? I would rather lose 200 of 1,000 than let it eat my whole account and have to start from scratch again. And I tell everybody now, if you're coming into this market and you don't have the discipline to use proper risk management, trade management, all of your demo account, every demo account you open should be on FTMO or another funded trader. Use their free demo, because once you go and break the rules, their ass is gonna kick you out. Okay, you can't sit there and just play. You have to follow the rules. So, you know, Money Coach and I did a thing. We started the FTMO, and we started working with people on trade management, risk management mindset. And these people are passing FTMO like crazy. They are passing FTMO like crazy, passing it like crazy. Why? Because of the stuff we're talking about right now, risk management and trade management. Okay, TJ had a question. So Mr. TJ, what's your question? I think it was TJ said he had a question. Hey, what's good?
I'm good. Just have a question. Like, I keep hearing that you say institutional. What's the name of the candle?
The institutional candle.
Right. So I just wanted to know, like, on what time frames, like, I should be looking for those candles.
They happen on every single time frame. Everything in Forex is fractal. It depends on whether you're going to be a swing trader, a scalper, day trader. Just whatever time frame you trade off of, they happen on every single time frame. And you can follow ICT on YouTube. He teaches it in depth. It's his concept. He wrote it. I give him full credit. And I learned it from, you know, he teaches it on YouTube. If you're in a program, you know, I don't kick any programs. Everybody's got to learn somewhere. If you're like an IML or B, they do teach it on those programs. If you're in mentorships like WWA or any of the other mentorships, they teach that as well. But it's on every time frame.
Okay. I know. I just see you circling one. Could you just identify one for me?
This one's on the weekly. So yeah, you're going to find them on every single time frame. You can find them on every single time frame.
I see it. All right, thanks.
Oh, you're welcome. And Sean says, GG, so when would we get in on the buy and avoid the supply and demand zone? All right, so go back to what we covered at the beginning. If you're in an uptrend, you're making higher highs and higher lows, it's going to come into your supply zone. You don't just sell because it's there. You wait for a break of structure, retest, and then you take your trade. Same when it comes down to your demand. You don't just buy because it's there. You wait for a break of structure, retest, then you buy. Then you start looking at your levels on your way back up, because now you're in that trading range. It could sell here, or it could just correct and go through. It could sell here, or it could correct and go through. And you just follow price action. The market's going to tell you. And if you pay attention, you will never be a person who never loses. You will lose a lot less if you pay attention and let the market speak before you react. All right. So that's it for me. I'm going to let the money coach come over and tell you guys how to keep the money that I'm trying to teach you how to make. Guys, learning how to chart is good. But trading psychology, money management, risk management is 90% of the game, because you can be a mediocre trader with awesome risk management and trade management and out trade the best charter in the planet if they don't have proper risk management and trade management. I've seen it. I'm a testimony of it. Again, there were days when my charts was killing everybody's out there, but they were making more money than me because I hadn't been taught risk management, trade management, and mindset. So hang on to your seats. Don't leave, because once you learn how to chart, again, it's no good if you don't know this next part. All right. So Money Coach, I'll turn it over to you. All right. Let me see if are you muted, Andre, Christopher? I think you're muted. Y'all, and just in case you don't know, he's a talented musician. He plays for one of the top gospel singers in the world, Donald Lawrence, and they're out on concert. He was also playing on the movie with the Clark sisters that was on Lifetime last year. And I think they're getting ready to do another movie. So you got like a celebrity getting ready to teach you guys. But I'm going to mute and pause the recording until I'm going to check on him because they are traveling. All right, so the money coach is back. I turn it over to you.
Oh, I'm back. I appreciate it. I need you guys to drop some ones in there for Gigi. Yeah, I mean, y'all don't know how blessed we are. I keep saying this. I keep saying this, and I'm going to keep on telling y'all. Y'all don't know how blessed we are. I'm telling you, Gigi is one of the best traders that I know personally. And because you are on here, you can consider her your little internet friend. I'm blessed that I get to talk to her every day as a best friend. But I'm telling you, my best friend is one of the greatest traders that I know personally on a level. Like, she is seriously, she's a great, if I had to say somebody that I look up to as it relates to a trader, Gigi is that person. She's definitely one of those people. And she just broke down the game, you guys. I need you to know, I'm very, very, very big on numbers. I'm big on numbers. I've been noticing, sometimes you ever looked at your phone and saw, the same time, like 444, 333, or 222. Anybody here ever just looked at your watch and seen that? You all the time? It's not just me, just numbers. Well, here's the killer right here. I see numbers all the time. When I say all the time, I see them all the time. And you know what number I see all the time? Is already seeing them right there. Everybody look at your phone right now and tell me what time you see. Everybody look at your phone and tell me what time it is. Isn't that crazy? See, on my time, we're East Coast time. So at East Coast time right now, what is 11:11? East Coast time is 11:11. And that's the time zone I'm in right now. I see that all the time. I'm telling you guys, there's so much positive energy and alignment on this particular Zoom, this YouTube video that you guys are going to watch over and over again. And I'm telling you, watch it over and over and over again. I have learned this as a musician, and Gigi has as a singer. I don't know if you guys know that she's a singer. She sings in church. She's very, very, very multi-talented. But nonetheless, you know how us creatives learn? Rehearsal. Everybody type the word rehearsal in the chat. Rehearsal. 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 There it is. There it is. There's the right spelling. Rehearsal. There it is. There it is. There it is. Now, I want you guys to, when I was in school, I took etymology. And that was the definition of learning roots of words. Rehearsal. Rehear. Does everybody look at that word and see that? R-E-H-E-A-R. Rehear. Thank you, Grace. Rehear. That means to listen over and over and over again. What does rehear means? Yes, there's the ear. To listen to over. That's how Gigi learns songs. She just listens to it over and over and over again. And at some point, she can actually sing it back without the track even going, because she's listened to it so many times, she can sing it because she's listened to it over and over and over. I can play some music that I've never sat down on a piano to play because I've listened to it over and over and over again. I have heard it so many times that I can actually go and pick it out on piano without even doing it, because I have rehearsal. This is why I tell you, if you listen to this video over and over again, the first hour that she went through from 0 to 11:11, which is like an hour and 11 minutes and some change. I'm telling you, she just broke down the game to you. Let's talk about risk management, which is the piece that I'm here to talk to you about. But I need you guys to understand, and I'm going to kind of share my screen. Gigi, I'm honored. I can't even tell you how much I really appreciate you for even trusting me with your brand. Everybody, look out for Forex and Chill. I'm giving you all some little nuggets on the front end. And I may catch a little tongue lashing on the back end, but guess what? We got some gear coming. Y'all got some shirts coming. We got some merchandise coming, Forex and Chill. This is the real thing. There have been people that have tried to take that name from Gigi. She's had to take lawful right of that name. This is the original Forex and Chill that you are on, the best. All right? I need y'all to understand that. Rehear. Listen to this over and over and over and over and over again. All right? Now, let's talk about, I want to share I think I'm sharing my screen. Let me know you can see my screen. Does everybody see it? Somebody unmute and talk to me and then mute right back.
I see it.
Boom. That's all I need. All right. I'm going to talk about risk management. Gigi's got the participants, so she's going to handle that. This is EU. It doesn't matter what pair you look at. Because price is fractal. Does everybody know? Does anybody not know what fractal means? Let me look at my chat. Does anybody not know what fractal means?
I don't.
Okay. All right. I want to bring you up to speed. Fractal means what happens on one time frame happens on them all. Gigi, if you can unmute yourself, and if you can even make it any plainer than that, make it plain so everybody can understand what fractal means.
Fractal means that what happens on one time frame happens on every single time frame. So everything you've learned tonight, if you're a scalper, you can do it on the lower time frame. If you're a swing trader, you can do it on the higher time frame.
Case in point. Do y'all see price when I am right here? Look at this. I'm just going to move this over. You see where my cursor is right here? Let's just say we start from this point. We know that this is a high. This is a low. Does everybody see that? Does everybody see that? That is a high and a low. Yes. All right. Everybody agree with me? This is a high. This is another low. Does everybody see that?
Yes.
Yes.
All right. Now, this is another lower high than this one. Do we agree on that?
Yes.
Yeah.
All right. It's 90 plus people on here. And let me tell you this. The more that you don't engage yourself in question and answer and actually doing the work, like Gigi is telling you, like back testing and forward testing, until you actually get into the habit of physically doing it, you're not going to progress. So you will be surprised at how much you will progress by just even talking back to the lecturer. Get in the habit of hearing yourself talk this thing out. That's the reason I'm asking you guys questions and I'm allowing you to answer. I'm trusting you with that unmute. Answer and then mute yourself, okay? I want to hear 90 plus people saying yes or no. That's why I wanted to see, did everybody know what was fractal? Because I want us all on the same page. Now, again, this is a high. If we start at this place, this is a low. This is a lower high than this one. Agreed? Yes?
Yes.
Yes.
Yeah.
Yes.
Boom. All right.
Yes.
This is a low than this one. Agreed?
Yes.
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 All right. Now,
Yes.
let me drop this rule in here right fast. Okay. Now, this is where the patience comes in, even from a rule standpoint. Okay. And I'm going to get into the risk management, because the risk management is right in here. Okay. When we take a trade, there is a trade in here that has already presented itself. Case in point, I'm going to go ahead and I'm going to print it out for you. There is a trade that has already presented itself. Boom, right here. Gigi, am I lying? That's a trade that has already presented itself just off a structure alone. Am I right?
Yeah.
Absolutely.
How
Because
come?
she just said impulse, correction, continuation. Isn't that what she was just drawing out to you guys?
Yes.
All right. We're not talking about order blocks. We're not talking about all I'm talking about is structure. Everybody, I need to see 94 people engaged. Type in structure. What she broke down to you was structure. Yes, even with the wicks, structure. We're talking about structure. If you typed out those 5 words, structure was the last word that I wanted you all to understand. This is structure. Higher highs, higher lows, lower highs, lower lows. This is structure. This call is going to be a game changer for you. Yes, it is, Arian. You are welcome. Starting at any point, if we would have started at this point right here, it still would have been the same. High, I'm going to go back here. It doesn't matter where you start. This is a high. This is a low. This is a lower high than this one. And this is a lower low than this one. Is it not? Agreed?
Yes.
Now, here's the rule that I need everybody on this call. If you already know it, hallelujah. If you don't know it, I need you to type it in the chat so you can go back and see it. And you need to hear yourself saying this over and over again. A lower high is only confirmed. Remember confirmation? I was typing GG that word confirmation. A lower high is only confirmed as a lower high when it has broken this higher low. So I'm saying lower, low, high, low, lower high. Now this lower high is only confirmed as a lower high because it made a lower low. All right, I'm gonna say that again. This lower high was only confirmed as a true lower high because it made a lower low, period. Let's just stop right there. Somebody just type in the chat what I just said. This lower high only became a true lower high when it broke this lower low and made a lower low. Does everybody see that? Please, somebody type that in the chat. Gigi, is that not true, what I just said?
Yes, unless it causes a break in structure, it does not qualify.
It does not qualify. Please, somebody type it. Look, it should be 90-some people typing that in the chat. If you don't get yourself in a position to where you are talking to yourself and hearing yourself say this stuff, you won't know it. You have to be able to regurgitate it just like I just said. High, low, lower high. Why is this a lower high? Because it's under this? No, because it made a lower low. That is the only reason why this is a true lower high, okay? Yes, Elliott Wade, it goes into all that. This is just basic structure, what she just taught you. Now, again, this was only validated as a lower high because it made a lower low. Now, here is the test that proves it. Is not this high lower than this high? Mute yourself. Is this high lower than this high? Yes or no?
Yes, sir.
Okay, we agree.
Yes.
Now, what do we normally in a bearish trend expect the lower high to produce? A what? A lower low, correct?
Yes.
Lower low.
Did anything here break this? Did this next lower low break this?
No.
No.
All right. So this is not a true lower high because it did not create a lower low. So something is going on right here. This means be patient and let the market tell you what it's doing. Am I right, Gigi?
Yes, sir.
This is where patience comes in. Everybody want to jump into the sale. Don't jump into the sale until you realize this is a truth. When this broke right here, then this gave me cause to pause to say, okay, some kind of reaction is going to come in when it tests this area right here. And there truly was a reaction. There was some bearish action right there. That trade right there could have been caught. Absolutely. You could have made money right there in that, just off of structure alone. So this is why you have to understand. A lower high is only validated when it makes a what? Another lower low. If you get that, then you understand when I say this is a low, this is a high. This is a low, this is a higher high. Now, actually, people will understand this right here was a high, low, higher high. This broke here. Does everybody see that? Because I'm going to be true to the game. Does everybody see this low broke this low? Does everybody see that?
Yes.
Yeah.
All right. So if we just be honest, because I want you guys to see this just like it is. I don't want you to get confused because some people will see that and be like, well, this broke this. Absolutely, it did. But what happened immediately after that? It broke this to the upside. Did it not?
Yes.
All right. Did it not? Okay. So now the market has gone back. What? Bullish or bearish?
Bullish.
Bullish.
Thank you. Now, all just on structure. The market is bullish. So when the market is bullish, we go impulse, flag, and then continues what? Up. So all of that was just because we were bullish following the trend structure. Low, high, lower low, higher high, lower low, but it went back to higher high. We were back bullish. It went bearish this 1 second. And so when people started selling right here, thinking that's how the market got you, because people just immediately sold. Because what happens after in a bearish trend? High, low, lower high, lower low, lower high. People think it's going to go lower low. Correct? That is what the bearish trend does. Am I right?
Yeah. Yes.
If you, I'm speaking in simple terms, and I need 94 people understand what I'm saying. If you don't understand what I'm saying, I really, really want you to speak up. If you don't understand anything that I say and say, can you say that again? I will say it again. I want you to see this plain, simple. I have not even broken out of this one little range. And that's truly what this is. This is a range. From here to here is a range. We have not gone any further than this. But it's so much power in this because you have a high, a low, a lower high. It eventually broke here and made a lower low. That means this is bearish. It went here, made a lower high than this one, but it did not break this one. So now the market, although it is temporarily bearish, is showing signs of bullishness because it did not create a lower low. Does everybody see that?
Yes.
Yeah.
Right. So now you understand why people who are looking to buy, they're sitting on their hands like, wait a minute, the market didn't make a lower low. So let me wait, be still, and see what happens. So it made a lower high, did not make a lower low. It made a higher high than that previous low high. So this is a higher high than this one. It broke here. Now the market is ranging again. And Gigi knows that I'm telling the truth. The market is ranging again because it just broke high and low all at the same time. Which area is it going? Right now, it's going bearish because it just broke low. Do you agree?
Yes.
Do you agree? Everybody talk to me.
Yeah.
All right.
Yeah.
So the market is bearish, but when it broke this high, it went
For that second, yeah.
right.
Yeah,
For only for a
second.
second. That's why Gigi said it's okay to take a loss. You're gonna take a loss. Because if I was following structure, I would have been looking for a sale because it broke to the low side. So if I would have lost, I would have just lost there. Now the market went back bullish. So now I'm like, okay, well, let me wait and look for buys. Because if I'm bullish, then I should be doing what? Buying or selling?
Fine.
Buying.
All right. I need 90. That was an easy one. I need 94 people. If the market is bullish, am I buying or selling?
Bye.
All right. If the market is bearish, then I need what we doing?
Selling.
All right. Again, I'm gonna do a cheap plug. We got some ForexNChill merchandise coming, t-shirts. You're gonna see the bull and the bear coming. Am I lying, G?
And it's hot.
Yeah, it's hot. We got the shirts for the women, we got the shirts for the dudes, we got the bulls and the bears. You'll understand when you see that, bullish and bearish. All right, we're talking money when you see bullish and bearish. Now, fractal, what happens on this time frame happens on the 30. Same thing. Everybody see this? It doesn't matter. If I didn't even tell you this was the 30, if I would have told you we were still looking at the 1 minute, all I see is this. High, low, lower high, did not make a lower low, did not make a lower high. It made a lower low than this one. This was the previous lower low. Does everybody agree with that?
Yeah.
Yes.
All right. So
Yes.
after we have a high and a low,
Yeah.
in a bearish market, we have a what? What comes after a low, high, low? In a bearish market, what's next?
Hello.
Low, right, lower high. What comes after a lower high in a bearish market?
Low, low.
Lower low.
Lower low. So all of this money right here could have been made right here. Do y'all see that? All of this is money we would have made just off of structure alone. This is payday right here. Does everybody see payday?
Yeah.
Yes, sir.
Yes.
All because we just follow structure. All because we just follow what?
Structure.
Structure.
All
Sure.
I just learned something new tonight because I was like following structure just because it went in that direction that it was like higher high, higher low, but the knowing that it's only truly a lower low if it breaks the previous one. I didn't know that before. Like, this is something that's really excellent.
All right.
I appreciate it.
If it just look, Jesus, I just told Gigi the other day, and this is, for those people who believe in Jesus, some don't, it's no problem. But Jesus he healed 10 people and only one person came back and said thank you. Didn't I just tell you that the other day, Gigi?
Yes, you did in my moment of frustration.
Exactly. Only one person came back and said thank you. He healed 10, but only one person. As long as it helped one person, it was worth it all. Do y'all hear me?
Yes.
Out of all the people in the world that could be on this chat, There's about 94 people in here. This is why everybody's not successful.
Now I could learn market structure right now because it's like the right way, because I was just thinking just because it was going up and then down and up and down, no matter what, that it was like higher highs, higher lows. Is now by what you're saying, if it doesn't break that previous one, then it's not. It's a fake.
Correct. We can do it all.
Man,
this is now. Let's just go back again, just like he just said. It's so easy, as easy as she just. And look, Gigi just made this point. This is a high. This is a low. Now, does this make a lower high? Yes, this does. We can put this square right here. But did this make a lower low? No, it didn't. So technically, we got to erase that one because that one has not made a lower low. Does everybody agree with that?
Yes.
Yes.
All right.
yes.
So until something breaks this end or this end, we are just in a range. Everybody type in their range. Range. This is the range that we are in. Range. This is 101. This is trading 101, y'all. We waiting on something to break either the low or the high to tell us what direction it's in. Does everybody see that? Boom. You love it. It's easy. It's easy breezy. Because sometimes we just overthink the stuff. Everybody thinking you got to go take ICT. Everybody think you got to take WWA. And look, and there is some amazing content out there beyond this of what we're teaching. But this is the foundation of being a gajillionaire. Why you think I couldn't stop myself from interrupting her? Because she broke the game down to you. Structure. Where did it break? It broke here. So this means that this is the true. We have high, low, lower, high, and this is a lower low. This is exactly what this was look like. Boom, boom, right? This is the next range. Does everybody see that? Now, what happens then? We're looking for a lower high to make a lower low. All right? This is exactly how this works. Make all of this money right here. Make all of this money right here just off of structure alone. Okay? If we just continued in this manner, again, this is the 30-minute. Look at this.
The next one broke the range. You could barely see it, but it did.
Exactly. Here, just like you
man,
said,
this is what I've been
low.
missing. Yeah.
This, this is a lower high. This is a lower low. But look, it broke that high. So people thinking it's bearish. They buying, and they lost money because guess what? It never broke this high. This low didn't make a lower high. It kept on making lower lows and it broke. So it went back bearish. Lower high, lower low, lower high, lower low, lower high, lower low, lower high. Look, no reason to buy because it never did break. Lower low, all the reason to make all of this money. This is nothing but cash money. Do y'all see that? Just off of structure alone. Y'all need to thank Gigi.
Yes, thank you.
Gigi.
I mean that.
Thank you.
Thank you,
Thank
Gwyneth
you,
Bear.
Gigi. Thank
Hey,
you.
GG, I think what's the name? You know, $1 million worth of game. I think you need to have that. You know what I'm saying? Not the Philly guys. You need to have it.
Hey, we're just sharing what was never shared with us.
Right.
I'm thanking both of y'all because now I got this recording that I can watch 100 times if I want to.
Man, I'm telling you,
There you go.
the views on this are supposed to be up in the billions. I'm telling you, this is the game. This is one you want to save to favorites and you want to watch this over and over. It's the same thing over and over again. All right. Now that we understand the trade, see, this is the trade. This is the trade. When Gigi sends out a signal, all she's doing is this. She just going, okay, I'm watching this. High, low, high. This made a lower low. This ran, but this made a lower low. Boom, boom. And we expect the money down here. And true enough, what did we see? Boom. Just off of structure alone. Just following structure. Just following structure. At some point, check this out. Now I'm gonna be here. Here's where risk management comes in. Okay, everybody type in RM in the chats. Capital RM. Here's where risk management comes in. And this is why I'm telling you, this is the most complete video. This is a doggone boot camp in one night. We just gave y'all a $3,500 boot camp in one night for free. Bless you. I'm in Times Square. I'm gonna just, I know I'm.
Thank you. Praise the Lord.
I know I don't have my. I know I don't have my camera on. I'm gonna cut my camera on just for a split second. Show you guys. I'm in Times Square because I'm out here with Donna Lawrence. All right. Cut my camera on. I'm gonna stop sharing.
Oh, I love him. He's awesome.
Just for a second. I'm in Times Square. Y'all can see behind me. Y'all see out my window. That's Times Square. This is the gift that God gave me, and I'm grateful to travel and get paid to do what I do. But I'm trying to replace all of that income with trading, and I am replacing all of the income with trading, so we can really do what we want to do. Let me go back to share my screen. All right. Again, here's where true risk management comes in, because risk management means that I'm not afraid to take a loss. It takes the fear out of losing because nobody wins 100% of the time. So if we can just make our losses don't hurt so much and the wins are big, it's a problem. Here's what I mean. All right. I'm going to put on my magnet for this. This is the magnet for the people that need to understand. And I'm going to erase these, and I'm going to be very, very technical. Here's why you have to be very technical. And this is a very complete Forex and Chill. I thank Gigi for asking me. And I'm just, she trusts me to be me. And I want you guys to come out of here really, really with a whole lot. All right. I want you guys to really, really understand what it is that is being shared with you. And I'm grateful that you're smart enough to invest your time, and you should see a return on your investment. Let's look at this right here. And I'm going to put this on our array so you can see it. All right. And it's on the magnet. So you got to be precise. This is a high. This is a low. And again, you got to be precise with it. That is an accurate low. That's why it's good to use this sometime. All right. Now, this is the next high. All right. Boom. Now, none of these broke this low until right here. Do we agree? Yes.
Yeah.
Yeah.
All right.
Yes.
So the market
Yes.
is the market bearish?
Yes.
Is the market bearish or bullish as of right now?
Bearish.
Bearish.
Bearish,
Going
bearish.
down.
So when you make a lower low, you look for a what?
Correct.
A higher high after that.
A higher high. A lower high.
Lower high, lower high.
A
Lower high.
lower high. See,
Lower.
again, that's why you got to watch this whole Forex and Chill over and over again. Because truth be told, we are bearish. High, low. This one, we expected a lower high. We would have taken a loss right here. Does everybody see that? This is where we would have taken our loss because we were in a bearish market and we anticipated a lower high. This represents a loss of, let's just say, 1%. Does everybody say? I'm gonna put that right there. We would have lost 1% right there. Okay. Now let's proceed. Right. Let's proceed. Because I'm being real with y'all. Because people say it's a scam, it's a this, it's a that. I'm just showing you the game. Here is, it broke the low right here. You see that? So it went back bearish. We just sitting on our hands. Now it went from that. Usually from a lower low, we expect a what? A lower high. Am I right?
Yeah.
You're looking at all of this. So the market is in deep consolidation. At some point, we would have figured out it would have hit this high. It would have broke this low. I'm just showing y'all the true points. At this point, we just following the market. It broke this high. We thinking bullish. At this point, it broke this low. We're back bearish. The market has gone back bearish. We just following the end. This is what monitoring the market on a micro level looks like. At some point, it made a lower high, and bam! Now we are in the flow. This is where we would have made. I'm gonna show you how many mistakes we'd have made. 1, 2. We would have made one right here because we would have thought it was bullish. This went bearish. All of these in here. We expected a lower high, lower low. We would have taken a loss right here because we would have thought it was bearish. It went back bullish. It went bullish. It went back bearish. We would have taken a loss right here. But then we said, okay, the market is now bearish. So low, high, low, lower high, and guess what happened? We finally found a lower low, and now we're in the flow. So we would have taken 4 losses only to make it up already. We would have made it up already. You see that? We would have made these little 4 losses up right here. We would have been made them up. This is behind risk management, okay? This is risk management. This is where we're not afraid to take these 4 losses because at some point, if we keep following the structure, we're going to get into the flow. That's where the flow is right there. Okay. Does everybody see that?
Yes.
All right.
Yes.
So now that you know structure, okay, and we talked about confirmation, if we're in a bullish market, okay, if we're in a bullish market and we see bullish market has a low, bullish market has a low, high, higher low, higher high. This is a bullish market, where a bearish market has a high, low, lower high, confirmed only by a lower low. Now, this is the game right here, broken down. All right. This is the game, right? This is structure.
I might, once I become a millionaire, I might get that tattoo on my left arm. For real, like, no, honestly, man, because I'm like, now all I need to do is burn those acronyms in my mind, like reading an eye chart. So I'm literally gonna take what y'all taught tonight and burn that formula in my mind.
Rehear. You want to rehear it over and over and over again. Low, high, higher low, higher high. This again, low, high, higher low. This is only confirmed if it makes a higher high. Just like this lower high is only confirmed if it makes a lower low. That's why we would have taken all these L's, because we were bearish right here, but it went back bullish. Loss. Okay, if it's bullish, then we're gonna make a lower high because we're looking for a higher low. But no, it didn't happen. It made a lower low. Loss. Okay, it made a lower high. Lower low. All right. And we would have eventually got into the flow, and we would have got on the right side of the bearish market. And now we in the rhythm, and we not taking losses anymore. Does everybody see? This is why you can't be afraid to take losses, because this is how the market moves. The market you can't predict. It's not going to always follow straight, fresh, bearish to bullish to bearish. There's some fake outs. These were fake outs. Does everybody see these? What were they called? Type that in the chat. Fake outs. Those are fake outs. The market will produce them. Fake outs. Type it in the chat. Fake outs. It should be 90-some people typing fake outs. The market is going to do that because it got to take your money every now and then. But at some point, you're going to get into the flow where the millionaires are, and you're going to follow the money. All you have to do is follow the money, not lead the money, follow the money. Gigi, have I told them anything wrong tonight thus far?
No lies detected.
Follow the money, not predict the money. Follow the money. Follow the money. Follow the money. You're going to take some L's because they're going to throw some fake outs at you. But all you got to do is follow the money. And at some point, you're going to get into the flow, and you're going to get in the right direction. Now, once you're in, from jump, why risk management is best while you're taking the losses. It ain't when you're winning that you're concerned about risk management. It's the losses that you got to be prepared for. So let's talk about risk management. This is where we're talking about the money, all right? Again, thank you, Gigi, for all that. I'm a student always. She just put me back in school. You just got to follow the money, follow the charts. Eventually, it's going to get into the flow. And that's how you make the money. All right. Now, let's talk about how we mitigate our losses and we make our wins big. All right. I need everybody to pull out your calculator, because absolutely, please do.
Hey, yeah, Andre, man, I just wanted to hop on, man. I appreciate, you and Gigi's words, man. And I got one thing to say, man, and this is like really for the beginning traders. And this, man, this concept is like you said, like you told Gigi, man, it's literally the sauce, and it is, man. And one thing for the beginner traders, I will say too, man, is once you learn that candlestick analysis, and Gigi and Andre actually gave a perfect example of them when they talked about the institutional level, you know, like the candlestick where it left a lot of wick and, you know, it basically going in the direction that you wanted to go in. So once you learn that candlestick analysis, man, plus this right here, like, listen, it's the sauce, man. So I appreciate you guys, man, for even for doing this, man. So it's like I said, it's the sauce, bro.
Exactly.
Thank you for jumping on with us tonight, Justin. I appreciate you.
Oh yeah, no problem, no problem.
Man, let me tell you this again. Risk management takes all the stings out the losses, because you're gonna take losses because the market does. It's gonna fake you out. It's no way around it. There you go, Arian. I see you typing it in. Low, high, higher, low, higher, high. And in a bearish market is high, low, lower, high, only confirmed by if it makes a lower low. And that is something that tricks a lot of people up. The fake outs. Like I just said, it's the fake out. The market is going to do the Allen Iverson. It's going to do that jab step. It's going to cross you over. This is the best point guard ever. That market is the best point guard ever. You should look at this every day. I still look at videos. I still record videos. I'm telling you, this is the game. Y'all should be calling everybody you know and telling them to watch this video. Now let's talk about risk management. Risk management means I already know how much I'm willing to lose. That's it, plain and simple. But you just got to stick to it. All right. The biggest problem behind risk management is people are really, really impatient, and they're really greedy. Impatience and greed is what actually makes people blow accounts. And if you really, really be honest with yourself, when you blew your account, it was because of impatience and greed. You were hungry for it, instead of just saying, let me just stop, take the loss, and just gather myself together. You were just determined to make the money, and you were just in a losing trade. Had you would have just set the risk management, it wouldn't have bothered you. 1% out of 100. If I had $100 and I lost $1, I'm not mad. 1%. If you got 100 and you lose $1, you're not mad. Now you got 100 and you lose 99. Yeah, you really hurt. Your feelings hurt bad. You got $100 and 50-50 of it slip out your pocket. You big mad. I'm big mad.
Hey, Chris, I want to address something Philip Johnson just asked. He said, is the 1% for your personal account or your funded? Philip, you should put this on all of your accounts until you become a top tier professional that can afford to risk 2%, 3% or more, because you've become that good that you rarely lose anymore. So anybody right now should be 1%, whether it's your personal account or your funded account. You know, eventually one day you'll get to a level where you're comfortable risking 2% because you know the market enough to know this is a high probability trade. Some trades we take, we're like, well, it looks like it's going to go to my way, so I'm only going to risk 0.5%. Some trades I'm like, man, this is like a textbook setup. I'm going all in. So you'll learn that as you advance. But right now, you should use 0.5% or 1%, regardless of what account you trade.
Oh, sorry, Gigi. My question actually was in regards to on the funded account, because even if you have, let's say, for example, a $100,000 FTMO account, you're only actually allowed to lose 10,000. So are you counting the 1% for the 100,000 or for the 10,000?
Every 1% is 1%, whether it's $100 account or $100,000 account.
No, but I mean, like if it's your personal account with let's say $100,000, it's your own money, your own personal account, it's all your cash. 1% of your entire account, you can lose 1% at a go up to 20%. But if it's a funded account, you can only lose that 10,000, and then you're out. So do you calculate the 1% from the 100,000, which only gives you like less trades, or are you counting it from the actual amount you have to lose, which is 10,000? Do you know what I mean?
Yes.
FTMO's rules are 10%.
But the thing is, once you learn to live up to FTMO's rules, you're going to become a better trader on your personal account as well. Because if you're sitting there risking more than you should, you're gambling at that point.
And I understand what you're talking about, Philip. Yeah, it's up to the individual. You know, some people do it like you say, they do 1% of the 10,000, and some people do 1%, which is the amount they can only lose. That's why he's saying 10,000. If you have $100,000 account, you can only lose 10% of that account, and you've lost the challenge. You can't lose any more than $10,000. All right. That's why he said $10,000. Some people risk 1% of the 10,000. That is a way that some people do FTMO, and some people do 1% of the entire budget, which is the 100,000, which is $100.
And again,
right?
it's going to also
So
depend on your level of confidence in your trading.
Exactly.
Some trades I'm not confident of, I use a lower risk, and some I'm like, man, this is clean. I'm going all in on this trade.
Exactly. So this is why it's patience. Okay, good point. But again, risk management means I already know how much I'm willing to lose on. If I expect to lose 20, I should only lose 20. All right. I like the way you put that in there, Gigi. Patience with the P-A-Y. Patience. Everybody type it in like she just typed it with the capital P-A-Y. Patience. All right. I know how much I'm willing to lose. If I'm willing to lose 1% of a $2,000 account, 1% of a $2,000 account, somebody put in the chat how much 1% of a $2,000 account is. What is 1% of a $2,000 account? I see it already, $20. If I had $2,000 and I lost $20, am I mad? No, I'm not mad at all. I'm not mad at all. That's what a true 1% is. But people want to gamble and they want to make the quick money. So they put 200 instead of 20. So now you done lost 10% of the 2,000. If I would rather lose $20 than $200 any day of the week. Salty, but not mad. Exactly. So this is why you have to honestly stick to risk management is a discipline. Everybody type that into the chat. Discipline. I need you to listen to this video over and over. Discipline. These are disciplines we are trying to beat into you. Discipline, all caps, make it real big. All caps, discipline, all caps, discipline, all caps. Do this over and over again. Rehear it. Discipline yourself. I'm a personal trainer. I'm a nutritionist. I eat the same foods all day, every day. I get so tired of eating the same foods all day, every day. I admit it. I get tired of it. But guess what? It has me in the best shape of my life. I'm very, very lean. I'm very, very healthy because I have disciplined myself to eating the same things over and over again. Now, am I motivated to do it? No, I'm not. But I tell my clients, don't anchor your goals under motivation. Anchor it under discipline. I'm not motivated to go to the gym every.
Sit down and sit back.
Yeah, part two.
Interesting.
Yeah.
Well, you're gonna have to wait. Shit. Don't get to handing me stuff as soon as I sit down. You guys, distractions.
We're gonna get this.
Lady, we can hear you. Whoever's talking about sitting on the steps, we can hear you.
We got her. She's muted. Okay. But again, rehear, discipline. I'm not motivated to go to the gym 5 days a week. I'm being honest with you. And I'm a trainer. I'm not motivated to go. And I believe a lot of you, if you admit it, you've been there with me. Anybody here ever been not motivated to go to the gym? You kind of get dressed and be like, man, I just don't feel like going, man. You're not motivated.
Yes.
Yeah, you're not motivated to go. I've been there. But guess what has got me to the position that I'm in right now? I'm disciplined. I don't anchor it on motivation. I anchor it on discipline. Discipline means when I don't want to do it, I still do it. Now that right there is some game. That is some psychology. That is you talk about psychology of trading. When I don't want to do it, I still do it. When I don't want to do it, I still do it. That is the definition of discipline. When I don't want to do it, I'm disciplined enough to still do it. When you get to that place, we're talking about, I'm assuming everybody on this call wants to be financially free and to be able to not live from check to check.
From check to check.
Correct.
This is the goal. Discipline. It's not about motivation. It's not about, I want to get rich, so I really am willing to gamble out here and put some bigger lot sizes out there. No, it's about saying, you know what? I'm going to keep my lot sizes small and let them naturally progress because I'm doing the same thing over and over again. 1% every trade. When you do 1% every trade and you got $2,000, 1% of $2,000 is what? $20. Do we agree?
Yes.
All right.
Yeah.
Let's just imagine this, $2,000. All right, $2,000. If we lost 1%, which is $20, I'm not mad. That's $19.80. If I lost it again, it's $19.60. I ain't mad. If I lost it again, $19.40. I ain't mad. If I lost it again, $19.20. If I lost it again, I ain't worried about it. No problem. If I lost it again, I ain't worried about it. If I lost it again, I ain't worried about it. If I lost it again, I ain't worried about it. If I lost it again, I ain't worried about it. We have lost 9 times in a row, but guess what? On that last time, we hit a 1 out of 10, which means if we risked $20, we made $200. So add 200 to this and look at my balance. That means I've made back in one trade, how much I lost in 9. Now, that's just me being accurate 1 out of 10, which is failing in anybody's category. If you made a 10 on the test, you would know that's a failing grade. But in trading with risk management, you can lose 9 trades and on that 10th trade, make all your money back and some profit. Do y'all see that? We can shut this church down, service down, and sing a hymn and leave right now. This is the beauty behind risk management. I'm good with losing $20 because I know at some point I'm going to win 200. And guess what? I'm not going to be wrong 9 times out of 10. I just showed you 4 times on the chart we were wrong. But on the 5th time, you mean we hit the pay nugget? Come on, y'all. It's easy. All you got to do is discipline yourself. I'm back to that word. Every time you hear that word, I need it with all caps, discipline. Type it in. This is psychology mixed with trading, mixed with risk management. We are putting all of this in the atmosphere together. Discipline. You got to discipline yourself to use risk management because you're confident in your trading, because you now have gone back to structure. Type that word in the chat. Structure, structure, structure. What is structure, my friend? Who's going to get the tattoo? Low, high, low, lower, high, lower, low. Low, high, higher, low, higher, high. Structure. That's the tattoo of life. Structure. And as long as we follow a structure, it doesn't matter. We'll take the losses because at some point we're going to get on the right side of the market and we're going to hit the payload. And because of that risk management has hit us, that's where it's at. This is the Forex and Chill of the night right here. If you follow what we just broke down, we don't have to go through all of these. I could take you through all of these. Let me show you an example. You see my screen. This is an account right here we started. All right. We started with $1,000. Does everybody see that? You can unmute yourself, and mute yourself. I trust you, but you got to mute yourself.
Yeah, I definitely want to get this part.
We started with $1,000. All right. Now, to the easy way to understand what 1% of a number is, if you move the decimal point to the left 2 times, that's what will give you 1% of any number. Any number. If you want to know what 1% is, the trick way without pulling out a calculator is take the decimal point and move it to the left twice. Play this video over and over again because that's the rule. It's right here on recorded. If I move this decimal place to the left twice, what number comes up? I see $10 versus $1,000. Does everybody see that?
Yes.
That's easy. So if I want to know what 1% is of any number, I just move it to the left twice. If this was a 2 and it was $2,000, that would show me $20. Does everybody see that? All right. So without a calculator, if I needed to know, because risk management, I got to know what 1% of my balance is, and I have to divide it by whatever the stop loss is. This is where the trading comes in. So it depends on what time frame you're using. Will tell you what your stop loss is. Now, here's where Gigi is the genius. She is the one that can call with the 30 pip stop loss. She can have some with a 5 pip stop loss. The lower your stop loss, the more your R&R, which means you can get a whole lot of money. The lower that you can take that thing down. It takes skill, it takes time, but you can get there. Everybody on this call, again, the market is fractal. And we talked about this at the very beginning. That's why I used that word then, because I knew it was going to come up again, because I was going to talk about lower time frames. The lower the time frames mean the smaller the stop loss. The smaller the stop loss, you can make a lot of money. Let me show you an example of what I mean. All right. I'm going to go down to Gigi's trades. All right. Check this out. I'm going to show y'all up here. Y'all see these stop losses, these lot sizes, 0.07, the 0.07. Do y'all see those lot sizes, 0.02s? Y'all see that?
Yeah. Yes.
Y'all see that? Because look at the stop losses, 35, 35. Now, when I scroll down here to Gigi's trades, look at her trades. 37 out of 100. All right, 27 with a TP of 250. That's 10% right there in one trade. 9, a little under 10. Look at that, 40 and 540. Y'all see that? This right here is FTMO in one trade. That's FTMO in one trade, baby. I just showed you right there. That's FTMO in one trade in anybody's books. Everybody been hearing about FTMO. I know that's the biggest thing. That's the biggest craze because y'all been hearing Gigi's team. Everybody, a whole lot of people hitting FTMO. I need everybody in the chat dropping FTMO. Drop that up in all caps, FTMO. If you want to be an FTMO funded trader one day, put it in the chat and let's see what you're going to do behind it. What you going to do behind it. Y'all need to get y'all need to figure it out. Y'all got to get where the people are. Man, Gigi is teaching the people how to man, look, we doing something great over here. We got 2 minutes. It ain't no accident. I can at least tell you that. It ain't no accident. After the third person, we knew we had something. And we giving it to y'all.
I have a question.
Question. I got an answer. Talk to me.
Okay, so what they meant by FTMO, does that one particular trade would have
you don't know what FTMO is?
Me neither.
I understand. I know what FTMO is. It's a prop firm that gives traders capital.
Okay, I'm talking to this young gentleman. Everybody else mute. Go ahead. Keep going. What'd you say?
Yeah, it gives professional traders who could manage their capital, but they have small amounts.
Correct.
They want more. But they don't have the trading psychology down.
Correct.
But they're giving them more money and stuff.
Right. And you have to have the psychology down in order to do this. As Gigi said, she has friends who are 6-figure and 7-figure traders that couldn't pass FTMO right now to save their life because they are not disciplined to that management. You have to have risk management. FTMO is not doable without risk management. And I'm gonna tell you how there's proof. Anybody in here who is FTMO funded, if you look on their certificate, it specifically says congratulations on displaying risk management. It's on the certificate. You got to have risk management. If you don't understand what 1% of your account is, move the decimal place to the left how many times? Put it in the chat.
2 times.
Man, somebody drop that 2 chains in there. Drop it in there. 2 times, 2x. That's how you figure out what 1% is. And from there, it's all about discipline. We back there, all caps, discipline. This is psychology, ladies and gentlemen. Read here. I want you guys to hear. I want you guys to hear discipline. Put it in the chat. Discipline. This is the Forex and Chill of life. Thank you, Gigi, for having me on your first one in a long time. But we giving the game out over here.
My last question is that okay, I know basically the formula how to get the lot size, and I know now how to calculate the 1%, but how do you calculate the stop loss and the TP? Is that just through marking up the chart when you use the fib or that tool and looking where your market structure is, that where the numbers are coming from?
I'm glad you said that, my friend. When you
because that's the missing part. I'm trying to look at this thing like a triangle.
Now guess what? Let me just tell you. See, this is why you're always going to be a student. Now, everything ain't gonna come in this one place. But yes, structure comes from just continuing understanding zones. That's another word that we have to, that would take a whole another hour to just break down. But we don't have all that time, ladies and gentlemen. That's why we have to do periodically boot camps. And now look, out of the 80-some people on here right now, how many of you guys would love to have a boot camp? Let me tell you something. Gigi and I have paid, and I'm not even lying to y'all, in excess of definitely five-figure dollars in education. Easy. Because what is 5 figures to $1 million? Again, if I take $1 million, let's do that 1% thing. Does everybody remember risk management? Y'all remember what I was just talking about? Risk management. Yeah. You remember 1%? What if I took the decimal place to the left twice? What is that?
10K.
10,000.
10,000. What if I risked 10,000 and made $1 million? Am I mad?
Yeah.
Thank you.
No.
So understand
Hell to no. No.
Now to a lot of people, when they hear me say a statement like Gigi and I have invested personally, each one of us alone, easy 5 figures in knowledge worth of boot camps in the past, boot camps out the yang. In the years that we've been doing, because we've been searching for this knowledge that we teach y'all, and we know much more than what we teaching y'all. But the basic of what we giving y'all is the game, is the true game. But there is even more to that. Like he just said, how do you know how to calculate TP? How do you know how to do trade management? See, that's a whole nother thing. Risk management and trade management are 2 different things. That's where Gigi takes the baton, and she comes back in and on another Forex and Chill, possibly a continuation of tonight on the next one, is trade management. But I'm telling you guys, when you put it together, we have invested easy 10,000 plus to get and we will be 7-figure plus traders. Mark it on here. We will be, because we will ourselves to it. We're not afraid. We're not afraid. We're gonna see 7 figures. We're gonna see it.
This call has been on my mind for the last 2.5 weeks since y'all did that last risk management call. I'm like, yo, I mean, y'all answered like the thing that I've been messing up on, even on the industry calls. It's like I always get in when I see that impulse, you know, which it works for me in effects, but it's like, yeah, it's reactive. Now I know, all right, leave that impulse alone. Let it go up, let it correct, let it go back down. And then when with these with the ranges, know where I could get in.
Exactly.
And with that zone, when y'all do that call, it's literally like, you know how you look at a triangle and it got like time, cost, quality, and scope. And so it's like y'all are literally making a pyramid of the blueprint. Like, and I'm so excited. Like I'm gonna shut up, but this
Hey,
is so fire, yo.
I appreciate that. I appreciate that. And it does us our heart good. And again, y'all, I'm telling y'all. Yes, TJ, ask your question.
What's up, man?
What's going on, T? Where you calling in from?
I'm calling in from the Bahamas, bro.
Bahamas. Okay. Talk to us.
I was just what I wanted to know, like, I saw where he drew a flag pattern. It was on a higher time frame, right?
Right.
I wanted to know if I go down on my lower time frames, and I was just looking at one of my charts, and I was able to see that same flag pattern. Would that be an additional confirmation to actually go off of, because of seeing that the market is going in a descending angle and it's looking like to push back up? If I go down on my lower time frame and I see that same pattern, is that another confirmation to say, hey, the market is about to buy?
If long story short, what he's asking, ladies and gentlemen, is let's just say there's a bullish correction pattern happening. All right. And I'm gonna draw out pretty much what he's saying. Yes, that's it right there. That's what he's saying. If it's making a bullish continuation pattern, then at some point on a lower time frame, if it's making, because we're expecting a low, high, higher, low, higher, high. So that means that there's on a lower time frame, it has to make a bullish corrective pattern for continuation on the low, because it happens on the 1 minute down here. And at some point, a whole lot of 1 minutes equal this big 1 hour, what we're looking at.
Okay, cool, man.
So yes, if you're expecting a bullish continuation, then on your lower time frame, you should be looking for bullish continuation patterns. Absolutely. That is point blank smart. Did that answer your questions, TJ from the Bahamas?
Yeah, man, that answered my question.
Very good, and I'm glad you saw that. That's good thinking. Because it got to happen on the lower time frame before it happens on the higher time frame. Very good.
And I want to address what Arian was asking about entries. Arian, I tell people entries is one of the last thing you should work on.
Right.
The first thing you need to know is directional bias, because if you don't know your bias and where you are in the market, you shouldn't even be pulling the trigger.
That's true.
Yeah, you definitely you in my mind right now, because I was definitely gonna ask, like, okay, what should I look for the entries on, like the 15 or the 5? But
The first thing, and when people come to me and they're like, I want to work on my entries, I'm like, okay, show me where you are in the market, show me what the market's doing, and they'll get down to the 4 hour, 1 hour and get stuck. And they're like, I don't know what the market's going to do from here. I'm like, then why are you entering? It's like, would you cross the street with oncoming traffic in both directions without looking first? Like right now, you don't even know where you are. So why are you even entering? So people are in a hurry to work on entries when they should be working on overall directional bias, knowing where you are in the market. It's like that aerial view. You know, when your boots on ground, all you see are the trees to your left and your right. But if you haven't worked your way from the top to the bottom, you're lost. You shouldn't even be making an entry right now.
I swear you were in my head right now, because I was like thinking the illustration of the saying, like I'm on like a expressway and like where should I get on the on ramp or exit off. But if you don't know if you're going south or north or east or west, it's like, why even get on the expressway? Like pull over, check out your map. Like, man,
Exactly.
this is some straight grasshopper sensei stuff right here, man. I'm loving it. I need this. I
So
need this. Yeah, thank you.
I'm telling you, you should be watching this. I'm telling y'all, this should be the highest watched Forex and Chill that Gigi has ever produced. And she's produced some quality ones. But I'm telling you, if you really want to be a million, if you want to be, I'm not even putting, that's why I don't like saying millionaire. Because why am I saying millionaire when I can be a billionaire? So you understand what I'm saying? It's mindset. Like, I don't even say the word millionaire anymore. I just don't put a cap on it and just say financially free. I can be as
so
wealthy as
basically,
I can be
I
as
want to
wealthy as I want to be. So I'm not even thinking about 7 figures because it's the ceiling is so high. It's so high. Jonathan got a raised hand. Talk to me, Jonathan. Where you calling from?
I'm from Trinidad and Tobago.
Okay,
Caribbean.
international. Okay, this is an international Forex and Chill, G.
Yes, there are a lot of Trinidadians who are on the call tonight. So basically, the guy from Bahamas.
Okay.
So before you enter, you must know the major and the minor structure of the market first, right?
Mm-hmm.
Hello?
Did I lose you? What'd you say?
Okay, so before entering, you must know major and minor structure patterns.
Correct. It's best. You for sure. We shouldn't even be talking about minor structure if we don't know major structure. Agreed?
Yes, is agreed, but within the major structure, there would always be minor structure.
Absolutely, because it takes the minor to make the major. Correct.
True.
True.
Same thing as in music.
Same thing as in music. You're talking my language, my friend. Absolutely.
Each note there's a minor.
Absolutely. The B flat minor is the same as C sharp major. And that's just for people who just don't know music. It is what it is. And just trust me when I tell you it's true. I could be playing in B flat minor, but to some people it might be C sharp major because all of those notes are in the same key, same scale. The C sharp major scale is the same, it mirrors the B flat minor scale. They are two of the same. So that is what he's saying. The minor structure comprises of what makes up the major structure. Does everybody agree, understand what I just said? It's not even, it doesn't take a,
Yeah.
she just drew it on the screen. You can have a big flag and there's a little bitty flag in the corner that's going to continue the leg of the big flag. That's all it is, major and minor structure. Watch this video over and over, guys and girls, ladies and gents. Confirmation, low, high. We usually get a higher low, but the higher low is not confirmed until it actually makes a higher high. If you don't stop right there and just repeat that to yourself and figure that stuff out, you're gonna forever be losing. Because that is what we just talked about, major and minor structure. It's all still comes back to the very, very base of the pyramid. Low, high, higher, low, only confirm if it makes a higher high. Other than that, it's just a point in a range. All right. Once we get that, you got to get that risk management, 1%, move the decimal place to the left twice, be strict with it. Don't try to get rich overnight. Be patient. See, we back to that word patience. All those words that I asked Gigi, if you go back on the recording, you'll hear, I said these words 45 minutes ago. Patience, confirmation, all right, confluence, risk management, execute. And we only executing on structure. We following the market. Market is going bullish, we thinking bullish. Okay, it went back bearish. It caught us slipping. No problem. I had $2,000. I lost 20. I'm cool with that. No problem. That's the beauty behind risk management. I took another loss. Dang. All right. I ain't got number $1,960. Okay, I took another loss. I'm still following structure. I'm being strict with it. It's faking me out because I'm following it. It's telling me bullish and it's going bearish. It faked me out. I'm gonna give it to you, market. I'm gonna give it to you, but I'm gonna catch you one of these times. And sure enough, I fell into the flow. Before you know it, my money went back over 2,000. Now I'm $3,000 in profit. That's how you make the money, babies, ladies and gents. And compounding, see, that's a whole nother, these are whole nother areas. Gigi got all this stuff on old ForexNChills, compounding your money, compounding your balance. All this stuff has been said over and over again, but this risk management, this psychology, these are the things that we weren't taught when we first came into the game. And we are determined to share this with you guys. I hope you guys have enjoyed what we have said on this evening. I'm gonna bid you guys a fair evening, but you should watch this over and over. All this week, you should be cutting the TV off and doing nothing but putting this on in your ears when you're at work. When you're driving in the car, you should be listening to something. Even if you're not watching the screen, I'm telling you, hearing this stuff over and over again, this is how you become an amazing financially free market analyst. Okay, we're trying to develop people who can analyze the market, because the person who can analyze the market, Gigi, is the person that's going to forever be paid. You taking Gigi signals, you paid. She stopped giving you signals, you broke. She trying to teach you what she know, so that you can be the signal.
That's why ForexNChill says, I am the signal.
I am the signal.
So y'all start wearing those ForexNChill shirts.
Man, it's a reason behind we
leveling up.
The signal. Right. That's a reason why. We want y'all to be the GOATs. We want to be able to say Arian is I can remember when Arian was just asking questions. Now he over here teaching, TJ, all of that. We should see all of this. We trying to reproduce, people, look how many people have passed FTMO. Brenda, we got so, and she's still over here learning. She ain't passed FTMO once. That's why
she's working on third.
Man, you got to stay hungry for it. Man, I'm watching this stuff. I'm listening to this. When I finish with this, Gigi and I, we probably gonna talk for a little while. But guess what? Both of us probably gonna end up doing independent. Man, we gonna throw some little trading video on and we gonna be watching and probably fall asleep to it. It happens all the time. I'm telling y'all, this is the game. It's 76 people on here, and I'm telling y'all people who stayed on from the beginning to the end, I guarantee you it was something in every second of this video that you needed. And I respect you guys for staying on here. Hopefully this won't be the last time that you guys hear from us. If you're interested in us doing something more intense, like a boot camp, man, let Gigi know, let me know, talk up, tell us what you want. Again, don't be afraid to invest, because every investor expects to see a return on their investment. I'm not mad at paying $10,000, $15,000 for this knowledge that I'm spitting out to y'all, because I know that, man, the return is going to be amazing. All right, I'm passing it back over to Gigi. Gigi, again, thank you. I'm so honored that you had me back as the first. Hopefully this won't be the last time I'm on, but of course, I know me and you got some big things in the future coming up. We got it's some amazing stuff coming up. I'm telling y'all, Gigi has been praying over this stuff. She's been speaking this stuff into existence for years. Like I've been hearing.
Should I look to preview the logo?
See, I was trying not to say it. I wanted y'all to see it. Then I tell y'all, it's a blessing if you stay to the very end. Y'all about to see the content that I've been talking about. Show it to them. Let me stop sharing. Boom, go for it. See, look at y'all. Y'all about to catch some of the logo. Look at it. I'm telling you, the bulls and the bears. Remember we was talking about that? Bullish and bearish. Now y'all understand what that means. It ain't just two animals on a shirt. Bullish and bearish.
Can y'all see it?
Very nice. Very nice.
Polos.
Very nice.
I'm definitely working on some colors for the ladies.
Right. Ladies, I want you to type in the chat. Tell me what colors that y'all see as a lady. Fellas, put the colors in there that y'all want. Let me see. Let the people tell us what we need to order. What color would you like to see this in?
Blue.
Type it in the chat. Type it in the chat.
Black for sure.
Type it in the chat. What color would y'all like to see it in? I'm telling, hey, I am the signal. Do y'all see that line up under that Forex and Chill? I am the signal. We don't want y'all to be dependent upon signals for the rest of y'all life.
Lupe, I'm looking at some pink and green too.
Yeah, we want y'all to, we want y'all to be the signal. If you're Greek in here, deltas, you should have some crimson and cream. You know how y'all do it. Noobs, y'all know how y'all do it. Zeta, Sigmas, we know how you do it. All the alphas, if I'm the only alpha, it's no problem. I'm used to being by myself, but I'm an A5. You know, I'm a man of mystery. Y'all don't know, I got a lot going on up here. I'm a square two for all the Masons. What's up?
Hey, I have a question though.
Yeah.
All right, so what do you have any social media handles so the people can reach out to you and speak to you on?
Absolutely. Gigi, tell them where they can find you on
Find you.
Actually, all of that will be in the
Oh,
description.
he's already connected to me.
Yeah, all of that will be in the YouTube. I'll put that in the put in the YouTube. It is just my personal page. Again, you'll see music stuff, you know. I'm always in the background trading, you know. I'm doing what I do. I want to teach people risk management. This is a gift God has given me. You know, I wanted to help Gigi out, and this is just a gift. It's easy. I know how to explain risk management to the dumbest of the dumb, including myself. You just got to be dumb to not get it. And I'm gonna keep on until you get it. We gonna because risk management is where it's at. That's where it is, and we never learned that. And so we giving y'all the game. You know, I want to know where everybody's from. We used to do that shout out in the beginning. I want to see where everybody from in the chat. Show me where everybody represented from. I heard Trinidad, and I heard Bahamas. Where everybody from? Michigan, North Carolina, Barbados, Chicago, Myrtle Beach, Nigeria, New Orleans, Honduras, UK, LA, whoa, Philly, Cleveland, ATL, man, St. Louis.
I see those lumbies in the house. Yee.
Look at that. Look at that. Barbados, Bahamas, Bangkok, yikes, South Khaki.
Hey, Justin, are you a Marine? I see you're in Beaufort.
Trinidad, North Kakalaki, Trinidad, Tobago, TX.
Hey, now, Gigi, I'm not a Marine, but I'm definitely that's I was born and raised there, down by the salt water. That's me.
Ohio, I see you. Man, this is beautiful. This is beautiful. I represent Memphis, Tennessee. All around, right? We got the globe. Florida, Alabama, right? Hey, man, this is love. I want y'all to really, man, show some love for Gigi, man. She goes overtime. Seattle, Jackson, Tennessee. I see you, Lindsay. She goes overtime, man. Everybody drop the goats in there. Find the goat emoji. Gigi, man, I'm telling you. And she does this stuff for free. She ain't getting 1 penny from this. And y'all, and it's people. Gigi is my mama. You see that? Hey, I'm telling you, it's people that actually put their mouth together to say that Gigi be trying to force them to build and all that, man. Gigi give more content than anybody I know. I'm telling you, she be giving the game, but that's what she wants. I am the signal. She wants you guys to be the signal. Gigi don't want to call signals for the rest of her life. Am I lying, G?
No, I get more money when I don't call signals.
She gets more money when she's not calling signals. And so she really sick and tired of calling signals, but she think about y'all. She want to help y'all. People who, you know, to get it until you should be able to do it without the signal. At some point, your goal should be to do it without the signal. And that's everybody on here. That's my goal. And Gigi know that. That's been my prayer the whole time. I don't want to do it with signals. I want to be able to do it without a signal, because that means that I will be able to eat when I get ready to eat, and not when somebody send me a signal that could win or lose. Win or loss, I can take a loss if I call it. I hate losing when somebody else called a signal, because that means, man, I could have not took that signal and kept my money. I hate losing. I hate taking a loss from a signal. especially because if it lose, I could have just said, man, if I had never taken that trade, I never would have lost that money. I am the signal. That's what everybody should be trying to be. I am the signal. That should be your mantra. I am the signal. All right. Appreciate you, G. You know I love you like 10 toes down. Me and Gigi ain't never met each other, but we talk every day, almost pretty literally every day. We best of friends. I ain't never seen each other face to face, but it's coming. When y'all see the pictures, you'll be like, they done finally got together. Look at them lovebirds. I'm gone, G, it's yours.
All right, man. Guys, I love y'all so much. It feels good being back on a Friday night Forex and Chill. It's been a little over a year. We did these things for like a year and a half straight. Didn't miss a beat. So we got some more coming in the future. Forex and Chill's always been free. It's always been about the knowledge.
Look at your phone time. It's 1, 2, 3, 4. I see them numbers too. I see them numbers too. I see it all the time.
So yeah, Forex and Chill's always been about free education. I started it for free education because I was tired of people, oh, you're not on my team, so I can't teach you. You're not on my team, I can't help you. So I ended up being the one person that the builders hated because I was teaching everybody for free, regardless of who they were and whose team they were on. I'm like, we're in this together. We're gonna make this money together. Everybody bless up. So guys, I'm gonna go spend some time with my family. Keep us all in your prayers. We love you. God bless you. And we'll see you on the next Forex and Chill. And just follow me on YouTube for the recording that will be posted. Have a great night.
Thanks, Gigi. Thanks, Andre.
Thank you. Thank you.
All right, thanks a
Coach.
lot.
God bless you both. Thank
Money
you so much for
Coach.
your
Thank
time.
you. Thank you.
Thank you. God
Nice.
bless
Thank you.
Bye-bye, Gigi.
Good night, everybody.
Bye.